This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall.
Welcome to today's meeting of the Housing Committee. Members of the public may like to follow us on @London Assembly on social media using the hashtag London Housing for this meeting. Please may I remind you to silence your devices. Our main item of business this morning is the build to rent sector. Can I ask our clerk, Diane Richards, if we've had any apologies?
Thank you, Chairman. No apologies have been received today.
Thank you. Can I ask the committee to note the recommendations set out in agenda item 2 and ask if any members have any other interests to declare? Can we confirm the minutes of the meeting held on the 15th of November and the 6th of December 2023?
Great.
Can we note the completed and outstanding actions from previous meetings?
Great.
Thank you. That brings us to the beginning of today's main business. As I've said, a meeting on the build to rent sector. Can I please start by welcoming our panel of guests? Rebecca Taylor, Chair, British Property Federation, Build to Rent Committee and Managing Director at Multifamily at Long Harbour Limited. Lesley Chen Davison, Chief Operating Officer, Telford Homes. Michael Keaveney, Director of Land and Development, Grainger PLC. Tom Copley, Deputy Mayor for Housing and Residential. Well done, Tom. You magically appeared. You weren't there the last time I looked up. Well done. Well done. That's a great trick, Tom. You'll have to teach me that. Vicky Pearlman, Housing Policy Manager, Private Renting GLA. And Tom Wacher, Strategic Planning Manager, Viability, Greater London Authority. Good morning to all our guests. Thank you for coming. As I said, this morning's meeting is about the build to rent sector. I will start, as is our tradition, and ask the first questions or two. I'm going to start with Rebecca, please, and Lesley, and then Michael. You might want to add a contribution as well. How has the build to rent sector responded to the needs and demands in London's housing market?
Good morning, everybody. I think it's helpful to note that policy H11 notes the benefits that build to rent provides to the wider sector, and it's further demonstrated through attracting investment, delivering more readily across the housing market cycle, providing a more consistent and at scale demand for off-site for manufacture, offering long-term tenancies and certainty and commitment to placemaking through single ownership and better management standards and quality of homes. What Build to Rent is providing for Londoners is for London's benefit. It is addressing the housing shortage generally and providing quality housing at market rents to those that need it, such as key workers. This is key in a globally competitive city such as London. The latest figures in Q4 2023 show that there's 102,523 units complete, under construction or at planning stage in London. This represents a percentage of 38.4% of the national total. It currently provides 46,000 homes in London, and over 1,200 units were completed in Q4 of 2023 alone. 26 London boroughs have at least one build-to-rent development in their locality, with 10 boroughs hosting 5 or more developments. Build-to-rent developments are raising the bar on the quality of housing that is delivered, as long-term investors who invest into the sector are aligned with the residents. They also provide a number of additional services above the PRS standard, and in some schemes this includes Wi-Fi and internet included within the rent, zero deposit options for tenants, on-site gyms, co-working spaces, 24-hour concierge, and importantly, security. Pets are welcomed, and often in many events, resident events are hosted. There's community engagement, and there's no hidden costs for tenants. The service charge is included within the rent. Thank you.
Thank you. Lesley or Michael, anything to add?
Good morning. I think the build-to-rent sector in London is developing nicely. 2 or 3 years ago, there was great momentum in the build-to-rent sector. 3 years ago, I would say the 2020 to 2021 years, there were 65,000 homes that were being approved by local authorities. Unfortunately, we have been hit by macroeconomic factors these last 2 years, particularly with cost inflation, which has been extortionate, and higher interest rates. We've also been hit with the uncertainty of building regulations. So unfortunately, the development of build-to-rent has slowed significantly in these last 2 years. I'm sure we're all aware of that. Only, I believe, for the year ending March 24, we're on targets to being less than 30,000 homes that are being approved. And actually, for the year of 23 to 24, I believe that only less than 2,000 new BTR units are actually being completed. So that is an unfortunate stat. Nevertheless, there is a great demand for housing. There's a great demand for investors in terms of investing into the market. We still have great appetite to deliver. And we believe that we will get a rejuvenated energy in delivering more homes once these macroeconomic issues are resolved, which we hope are temporary.
When you say 30,000 homes have been given permission, do you actually expect them to be built?
We do hope that they will be built, and that is one of the problems, Lord Bailey, that viability is an issue at this very moment, particularly with cost inflation and interest rates, and again, the uncertainty of building regulations. As a developer, viability is actually what determines whether we can carry through with the development. And there are, we look at the viability as a whole, and not any one item makes this possible, but it's the culmination of all of these items, which makes the development scheme possible to be delivered. And it is particularly difficult at this time.
Thank you. And please, could we call me Sean? Thank you.
Thank you, Sean.
Michael.
I'd written down chair here, so now I'll use Sean as chair. So I just like to focus on two things. 146,000 homes is what it's provided to London, which is much needed. I think the thing that perhaps Rebecca didn't touch on is the mixed tenure opportunity of build to rent. So many operators, including us and Long Harbour, will have discount market rent homes within a build-to-rent development. It's tenure blind. There is no different charging for those customers. And effectively, what we have is an opportunity for mixed communities. And I think that's one of the excellent things about build-to-rent. The private rent with the discount market rent in the same buildings is a great opportunity. And I think meets the needs of a wide range of Londoners, therefore.
Okay, thank you.
I think the helpful thing about discount to market rent is we are delivering those homes without any government grant. And so those are being delivered purely by the private rented sector, or by the build-to-rent sector, and by those private developers and operators.
Okay, thank you. Let me move on slightly. Are the schemes being built in areas where there's the greatest need for rental housing? If I start with Michael this time.
I think they're clearly built where there's a need for housing. We operate at circa 99% occupancy. I should think Long Harbour do as well, and most operators are full. When you say the need for the most needed, build to rent operates best in transport nodes, and therefore there'll be parts of London which are not near transport nodes where build to rent might not be the right solution for housing, but it certainly works brilliantly around transport nodes.
Okay. Well,
yeah, I would second that. Telford has been delivering homes in areas of growth, particularly in brownfield sites, since inception, and where we deliver tends to be where we believe we can create greatest impact, and in areas of growth. And where we can create greatest impact is where we can deliver 300 plus homes in one scheme, and where land is available to do so. The importance of infrastructure and providing transport and providing accessibility to the occupiers and of those communities getting to areas of study and work is incredibly important. So historically, those areas have been East and West London areas, which is actually where Telford has been delivering most.
Okay, thank you. Rebecca?
I would confirm that. I would say majority of the schemes that are being delivered are with zones 2 to 4, and there's a range. I would say that only 6 boroughs, though, within London explicitly support build-to-rent within their policy, and 16 authorities do not offer build-to-rent at all. Kensington and Chelsea and Islington Council are expressly against build-to-rent, and arguably there's a need for all types of housing in all locations across London. So I think for all of us here, we're very committed to delivering homes, and so more could be done to deliver across the wider London market.
Just a quick question to Deputy Mayor. Are you aware that particular boroughs are unfavourable to build-to-rent?
I certainly think that there are some boroughs that are more favourable than others. I think perhaps there's still a little bit of a sort of learning exercise going on with boroughs. Build to rent, is still relatively in its infancy in London and in the UK, certainly compared to other European countries. So it might be that some boroughs are still sort of getting their heads around build to rent as a concept. But of course, London-wide, we have policies, as we've already heard in the London Plan, that specifically help and support the build-to-rent sector, and those apply, across the whole of London.
Why do you think a borough might still need to get their head around it? Is there particular issues, or is it because of the different makeups of boroughs? Because of course, Kensington Chelsea, for instance, is very different to say Havering or.
Absolutely, and you've heard absolutely rightly that there are certain places where build-to-rent makes more sense than others. So rightly around transport nodes and things like that. But also I think that in any market where a tenure or a form of housing is coming in that's relatively new, it might be that boroughs and borough planning departments are not, they're not as familiar with it as a concept. They might be thinking, no, we just need to prioritise build for sale, for example. So I definitely think there's some learning that still needs to go on and to happen across London about the sector. And I think I recall, I don't have it in the top of my mind, unfortunately, Chair, but I think Cavendish worked with the builders rent sector to do some work. Not specifically, I think, with boroughs, but actually with members of Parliament, to sort of poll the views of MPs, sort of cross-party, on build to rent, to get their sort of sense of the attitudes of politicians towards build to rent. And I think that showed, certainly amongst MPs, there needs to be a bit, I think, there needs to be a bit of work, with politicians about the nature of the sector. But as I say, I don't have that at the top of my mind. But I think it's been published. So it may be of interest to the committee in terms of attitudes towards build to rent.
We'll certainly look for that document. And finally, are you and your team speaking to the appropriate teams across London, council development teams, basically about build to rent and why you're in favour and why you support it and how it could be relevant for them? Is that something you're doing?
I mean, yes, absolutely. I mean, there'll be the work that our, no doubt, our planning department, our planners do, talking to boroughs and liaising with boroughs about developments that are coming forward within their areas. But certainly for me, when I'm talking to councils, it's something that I am keen to promote in line with the Mayor's policies in the London Plan.
Okay, thank you. We'll move on to Assembly Member Swimmer.
Chair,
sorry, excuse me, Michael, go ahead.
Can I add something, perhaps not from a political perspective, but from a developer's perspective? As a developer, there's definitely a feeling that there are only two forms of tenure that are of interest. One is for sale and the other is affordable homes for rent. So intermediate homes and private rented sector homes are just not seen as a priority as far as we see. In fact, most local authorities don't run lists of intermediate demand. They only run social rent demand. And so there's a whole groundswell of need for intermediate rent which is not identified, which we're meeting, as well as a massive need for rental homes, which no one seems to be measuring. And the only way we can measure it is by, as you see, occupancy at 99%. And I think, I don't know why that squeezed middle, as Ed Miliband once called it, is neglected, but it definitely seems to be the case from our side.
Quickly, Deputy Mayor, you're definitely aware of that because we've had that conversation several times. Do you think it's possible to quantify the need for that middle, the amount of rental that squeezed middle would need across London? Is there a way of a desk operation that could quantify that?
I would perhaps look at John here in terms of the work that we do, looking at assessing need in terms of the London Plan. Would that be going on as part of the Planning for London process?
Yes. So I mean, the current evidence base is the strategic housing market assessment, which informed the current London Plan, and that will be updated for the new London Plan as well. What that identified was that the majority of need for homes in London is for affordable homes. The majority of need for the type of affordable homes is the low-cost rent, which might be one of the factors influencing the borough's approach to build to rent, but a significant proportion of that still is for intermediate tenures as well. So overall affordable housing within that low-cost rent, but an important proportion is also for intermediate rent.
What you're saying will probably sound familiar to everybody on the committee, but what I'm trying to get at is, do we have any idea of the scale? Because a number of people who are in that intermediate place will never be eligible for affordable housing, or certainly so would want to access the other type of housing, and it'd be interesting to understand the level of need. So is that piece of work, is it possible to generate that figure?
Well, we can certainly have a look at what the figure was in the current evidence base for the London Plan, which I think does look at the proportion of need for intermediate housing, and that's for middle income earners. And we can talk a bit more about what those incomes are and what the income caps are applicable to affordable housing in build to rent. And that evidence base will be updated for the new London Plan, but very happy to provide the latest figures that we have, albeit that those will need to be updated.
Thank you, we'd really appreciate that. Thank you very much. Assembly Member Emma.
Good morning, panel. I wanted to, first of all, start with Rebecca, but also open this up to Lesley and Michael. First of all, to say I'm really pleased that BPF is here. I've come across your work in a previous life. But we've just had an exchange about the gap between the build-to-rent products that are being offered and I guess their price point and their affordability whether or not you think that speaks to why boroughs might be resistant to prioritising build to rent, because it can, it's very much not a middle income offering, in slight defence of Islington, which is one of my boroughs. But I wanted to ask you, so do you feel then that in the context of London's housing crisis that the schemes that you're developing are being targeted towards those most in need, and just if you have an assessment of what you consider need from your perspective as developers?
Sure. I'd like to also say that I'm a London renter myself, so since relocating in 2007 I've rented my home, so I have first-hand experience, not just on a work level but also a personal level. I think the build-to-rent sector has not really done itself many favours since launching 10 years ago in how we've presented ourselves. A lot of people have picked up on the word premium, and that was something that I think has been misconstrued in the wider market. Certainly, the offer that we're providing is to a premium of what the current offer is in the PRS, but that's not necessarily a reflection of. Premium doesn't always mean more expensive. It just means it maybe reflects the quality of PRS. So I think the sector has a bit to do to change the perceptions around that. Certainly between all of us here at this table, we offer everything from a lower market all the way up to a premium offer, depending on the location and what's right for that particular location, and an interpretation of, I think, what you would see as premium. I think affordability for us, though, is key, and particularly for our residents. Our investors are institutional, long-term capital. Sitting within my fund, we have a 20-year joint venture with pension plans, and their focus is obviously the long-term income stream that needs to be supported by occupancy, as Michael says, and that also needs to be supported by reputational risk. So I think we're much more focused on attracting residents and keeping residents, and therefore affordability plays into that. I think it's worth noting that 17% of residents within the sector are public sector workers. This is very similar to that of the PRS sector, where 19% of people are public sector workers. I think comparable earnings between build-to-rent and PRS are there. 18% of our residents earn between £26,000 and £32,000 per year, while the wider PRS income band constitutes 22%. And in build-to-rent, 23% of renters earn £32,000 to £44,000 compared to 19% in the PRS. So whilst we're providing a better quality product, we are fairly in line with the affordability bands of the current PRS sector. I think, as we said, full occupancy and keeping residents happy is a focus for us. And where we are delivering affordable housing, it is tenure blind and done without any subsidy or grant. I think in terms of the threshold, I think what I would also say is that we're much more focused on affordability than other sectors, like the housing for sale market, who are focused on an initial profit on cost. Institutional investors, for us, we look at the key of the underwriting of the rents when we're looking at deals, and also when we're actually occupying and managing our buildings, and making sure that threshold doesn't exceed between 30% and 40% across all of our assets. So it's very key focus for us to be able to provide a diverse range of affordability on our schemes.
Thank you for the question, and I echo what Rebecca was saying. I also echo what Tom was saying in terms of education. I think there are a number of local authorities who could be better educated on the wide range of tenures and the value that they add to communities. We certainly are in favor of a hybrid of the both low cost and intermediate affordable housing. I think it's important that you integrate both into every community. On average, Telford are delivering 39% affordable homes, and that does cover the full range of affordable housing. The Section 106 affordable housing being delivered in partnership with registered providers. They're important partners to us. They're important partners to most developers who are delivering on site. And then similarly, the range all the way up between shared ownership and DMR. DMR particularly is quite useful, as both Rebecca and Michael have mentioned, because they can be invested by institutional capital because they are pegged to a proportion of market rent, and they grow with market rents, but importantly at a much lower proportion of market rents. And they also ensure greater integration in communities because they can be pepper-potted within a building block. Again, importantly, providing the full range of affordable housing. And if all London boroughs could be given that, could be encouraged to provide that consistency and approach, that'd be really helpful to developers as we deliver.
Okay. And Michael?
Thank you for giving me the chance to speak. I think really what you asked is a question about the needs of investors versus the needs of society. Would that be a fair summary?
Yes, but also specifically the needs of the people that are your clients, the renters.
Our customers.
Yes, yeah.
Just to be a little stat, there's a document that the BPF and Business London produced called Who Lives in Build to Rent? And I can confirm in that, I think the average rent ratio to income is 29%. And that accords with our own internal stats for our customers. And 29% is perfectly affordable to our customers. We have no arrears. We have a handful of payment plans, if that. So the people that we rent to can absolutely afford to live there. The question, and of course then we have DMR, and the affordability for DMR is set by the London Plan and local authorities around the country. So yes, clearly, if 99% of the buildings is occupied and we have no problems with customers and they're happy, then they can afford it. I think the question you touched upon, what investors need. Investors are looking for long-term income streams that are indexed to inflation. That's really what they're in it for. That's why pension companies are in it. That doesn't really, the idea that you would seek to push rents really hard one year and then have it drop the following year, that doesn't help anyone. What they want is stable income growing. And the returns of that sector are low historically compared to other forms of development. So that's really important, and keeping the buildings fully occupied is essential because it costs 25% of our rent to operate them. If we then drop our occupancy, it hurts returns as well. So full buildings that our customers like and want to stay in is critical to the build-to-rent sector. And I think going back to the needs of society, we've just heard that there's a need for social rent forms of housing. Build-to-rent is excellent at providing intermediate rent as a product within mixed tenures. It can provide social rent levels, but you'll get less of it because it goes back to income streams and land values. Also, I would say that, from my personal opinion, we have an RP as part of our portfolio, and we've actually set one up with TfL as part of our joint venture. Our housing associations, or RPs, as we like to call them, do far more than act as landlord. They have a whole ecosystem around looking after their residents, and they are best suited to dealing with social rent type customers because of that ecosystem. I think what we're good at is intermediate rent and private rent. All
right, thank you. So you've mentioned allocations and the fact that you have 99% occupancy, which sounds really good. But I wonder, in your relationships with RPs, obviously they're doing the management of the... Okay, so what do they do for you?
Nothing. So the RPs are part of our structure, and actually they're only set up where we've brought grant in, because you can't have grant without an RP.
Okay.
So effectively, the principle of build to rent is it's single ownership, single management.
Okay.
And so the RP just allows us to have a wrapper, and we operate it as a proper arm's length RP.
Should you need to?
For that, yes.
Okay.
I would say, though, however, so we're a builder and contractor, and when we build, oftentimes we are delivering Section 106 affordable housing in partnership with our RP partners.
Okay. That's really helpful. So that changes my next question slightly, which is... we will move on to TfL in the second part of this meeting, but what policies are there in place to ensure that build to rent is accessible and open, and where possible targeted at key workers in your developments if you're not going down the RP route of social or Section 106 properties?
So really what we would like is, obviously it's in the Section 106 that these are DMR homes, for example. We do actually have key workers living in our apartment blocks who are not part of the intermediate rent. They're paying market rent because they can afford to do so. Where it's the DMR, it's an intermediate product. What we often find, and I think I alluded to it, is there aren't that many lists. And so there isn't an easy, where social rent, we can go to the local authority and they'll actually nominate. We do enter into nomination agreements, but of course if there's no list, it's difficult. So what happens is there's an opportunity to nominate, and then it's then widely marketed outside of that nomination. But we would be delighted to have the local authority deliver us customers for the intermediate product. That what often happens is they don't have that list, they don't have that demand. We have to advertise it through Rightmove, etc., etc., etc.
Okay. So to all three of you, I'll start with Lesley this time. How quickly have build-to-rent schemes in London been built and occupied compared to other tenures? You did talk about what's in planning and what's been completed, but how does that compare to other tenures in London?
Currently, they're being completed, unfortunately, at a very slow pace. Viability proves to be a very difficult problem for developers like Telford. We do have a significant proportion of affordable homes in the schemes that we intend to deliver, but a portion of that is social housing, and where there's an uncertainty of whether grants are available, together with changes in building regulation, cost inflation, interest rates, et cetera. All of those things make it very difficult to deliver at the moment. And again, so momentum has slowed down quite considerably over these last 2 years.
If I can just add to that, I think construction fell 9% last year in the delivery of build to rent. I don't have the stats for housing building for sale, but I can follow up with that as a separate question. I think speed of delivery is very unique to build to rent because we are focused on income. And so you will often find we work with developers like Lesley on a back-to-back basis. As soon as planning comes in, we want to start construction and see delivery. We're much more likely to use modern methods of construction. So one of our schemes that we've got in Walthamstow is being delivered by off-site manufacture. That's a volumetric scheme. That helped us to reduce the build program by 14 months, and we're currently 3 months ahead of that schedule. And again, that comes down to our motivations of trying to fill a building as quickly as possible and focus on that income. Across the market, you'll see in a peak market, I think typically the house building market works at around about 6 sales per week. We work at around about, well, in the peak of the market just now, anywhere between 22 and 35 people moving in per month. So, if I go back to the house builds, it's six sales per month. So for us, that just shows in terms of occupation, that helps local authorities in terms of getting council tax paid quicker and obviously helping residents move in quicker. But as I said, speed of delivery is our investment model. I think one of the asks that we were looking at previously was how to reward speed of delivery. The late stage viability reviews, I think, were introduced to try and stop house builders from land banking and promote delivery. At the moment, where they work, they do hinder though build to rent because it doesn't necessarily go away if you deliver on time. So that could be something that could help to promote the speed of delivery coming forward. But as I said, we are very much aligned with the income stream and therefore looking at other ways to speed up the construction process.
Yes, and to add on to that, I think the benefit of build to rent compared to build for sale is that once it has completed, everything that Rebecca said is true. Once it's up and running, you can house more people more quickly. The difficulty for developer is actually getting to site, starting on site. That period of time between purchasing the site and getting through planning, getting through building gateways, making sure your scheme is viable, and then actually starting on site, that is the uncertain part, and actually anything we can do to make that a shorter period, a more expeditious process, that would be the support that we as developers would be looking for. Because once we're on site, that PC is going to happen.
Can I just add a point? So there's a bit of a structural issue here. You'll have heard Lesley talk about building social rent for RPs. So to be clear, Long Harbour and Grainger are operator investors. We build our own stock as well as forward fund it, and then we operate it for the long term and hold it for many, many years. What Telford do is they build stock for people like us, but they also build stock for RPs. So that block will be a block of social shared ownership or social rent standalone. It's not part of the build-to-rent element. There'll be another build-to-rent forward funder beside it, perhaps. And so you'll have two different owners, two different buildings potentially. They'll also do mixed tenure depending on the operator, but it's a slightly different model. So I think you can, in terms of occupation, it's about 4 times as quick. It depends on the market. Sometimes we've been shocked at how quickly things have let, particularly outside of London. We recently opened in Derby, and we were really shocked at the demand that was latent there. And sometimes it slows down. And in the pandemic, it was pretty slow. And in fact, I'd say London is slowing a little bit now. So we're part of the regeneration of Hallsville Quarter just up the road. And we've certainly seen a very fast let-up period, and then it slowed down a little bit during the winter months. So I think it just, you can't be scientific about it, but probably 4 times as fast as a house builder. Just finally, Leslie's point about speed to get to site is not built-to-rent problem, it's a housing problem. It's for private developers. They're also struggling with all of the same issues to do with viability and town planning process.
Okay, that's really helpful. So that's more of a systemic issue rather than specific to your part of the building sector. So if I can start with you then, Michael, this time. So it's been suggested that build-to-rent is, and feel free to disagree with this, I'd like your opinions, is becoming more viable for developers than, if you like, build-to-sell, so private sale. Do you think this is true? And if so, what potential does the build-to-rent model have to support the viability of house building projects in the capital?
I'd like to know who said that. I don't think it's more or less viable at the moment. I think if you're looking at ability to buy land, build-to-rent is not the best payer for land. You know, private for sale student accommodation would historically be your go-to if you want to maximise the value of a plot of land. Build-to-rent tends to forage around for the right land at the right value to make the model work. It can't really compete in toe-to-toe combat, as it were, with others. In terms of viability, I think the difference is this. We are in challenging times with viability, as are the house builders, and you'll have seen they have dropped off their build rates dramatically now. The hope is with build-to-rent that over the because we're a long-term view, that we will continue to build when it's difficult and when it's challenging times. And I would say that because of the model, that's more likely. So we also, I think, really important to note, and I said it earlier, our returns are a lot lower. So our return hurdle is lower, and therefore that probably means we're first out of the blocks to get going. But we, as I say, it is challenging at the moment to do with cost of debt, etc. But the thing that is actually holding us up right now, I think it's 40,000 homes, you'll know better, is we don't know what to build at the moment because of the staircases issue. So an awful lot of us have just put our plans on ice until we know what to build, and then we can start again. So viability is an issue, but it's not directly holding things up today. Today, we don't know what to build.
Okay, so you, like everybody else, is waiting for that guidance around second staircases?
I think us more than anyone else. I think there are 2 parties that are incredibly interested in what's happening, and that will be the RPs and the build-to-rent. And the reason for that is we're going to hold this stock long term, and therefore we want to build the right thing. We believe wholeheartedly that single staircase buildings are safe, and if they're well built, well designed, well managed. But we're investing our shareholders' capital, much like RPs are investing their money, and we want to build the best. And we need to know what the best apparently is before we can then adapt it. So there is a backlog of development waiting on that clarity.
Can I just add, I think there is an opportunity for build to rent right now. I think probably 2023 was one of the hardest years that we've seen in the sector, but with Help to Buy going away from the house builders, it's the first time that I've seen in the last 10 years that house builders are willing to work with the institutional investors. We ourselves did a deal last year with Barclay, with the St George Group, where we purchased almost 400 homes from them. and that conversation wouldn't have been had probably even 12 months before. So I think there is a real opportunity for the build-to-rent sector to plug a gap where there was central government funding to help support and continue that house building. But as we say, at the moment, I think it's particularly last year, some of the issues they have been touched on that hit the sector. Obviously, the high inflationary market that hit operating costs. Yields have softened quite a lot. So as an example, yields in London have moved somewhere between 70 and 100 bips. On a 500 unit development, that means a degradation of around about 65 million on value. And the institutional investors have taken that on a book value, but that comes back to the viability of land. That's an extreme, that's on the assumption of 100 bips moving, but that is the level of kind of what's happened. And we saw yields move in other sectors, so the office and the industrial sectors moved very quickly. The residential sector has been slower to move, but that created some uncertainty with the institutional investors about where that yield movement's going to be. So whilst we face the same challenges as everybody else with regards to building safety, construction costs, so on and so forth, there are a few unique things which have restricted the sector in the last 12 months in particular.
Great. And then I'm going to move on to wrap up two questions and one to all three of you. What potential is there for the government and the mayor to support the build-to-rent sector? Can we draw on lessons from other countries, for example, the US and Canada, where build-to-rent has a larger market share and arguably might target slightly different demographics of people? I guess building on your point about not being eligible for grant, what more can be done to incentivise and enable prospective build-to-rent developers?
You're totally right. I think actually the build-to-rent sector, as we see it today, has been fashioned on the North American market, where there's less of a focus on home ownership, and certainly the institutional capital now dominates that market. I think you can look to Europe as well. The German market has a very large institutional ownership in their private rented sector. In fact, it's dominated by institutional investors. The product offering there is varied and offers a range of mid-market and lower market. You can when you rent a flat in Germany, you don't get a kitchen, but that's just the norm. You rent for longer. So I think, coming back to my earlier point about changing the perception of build-to-rent and identifying that we are delivering across a range of those sectors and focusing on the need at all levels. As I said, we are doing it as a sector, but I think we've got a bad reputation for not doing that. In terms of policy, grant funding becomes quite difficult for us. As we say at the moment, if you're grant funded, then it has to be managed by an RP, which then means you've got different ownerships within a block. So I think better policies around how to speed up delivery and reward fast delivery would be welcomed as opposed to anything else. So I mentioned before the late stage viability reviews, a review of those around build to rent so that they only become necessary if we haven't met our targets is probably a way to deal with something without any grant funding. And Tom mentioned it before. I think the government and the mayor, we could do a lot more to work together to educate people on what build to rent is, the variety of those product offers, and what's right for those certain locations where there has been, I suppose, a reputational position around the sector. So I think there's a marketing piece to be done across with the local and wider government.
So as a developer, we are delivering across the entire band of affordable housing. So from the low-cost Section 106 affordable housing all the way through DMR. And we would, an element of our viability is based upon grant and having clear visibility and certainty of grant. Currently, the only people who can apply for grant are registered providers. And therefore, at the point in time when a developer is acquiring a site of land, we have no visibility on whether that grant is going to be available for us. So it's having that foresight. If there's a way, we would ask policymakers to consider making the application for grants more transparent, with greater clarity on what actually the delivery and awards of grants. That would make it simpler for the developer to know that it is actually available, and we can factor that in, and that makes it simpler for us to actually assess a piece of land and get on to delivering. That's an important element for us as a developer. And then, frankly, the other thing I would ask for is more investment into planning. You know, planning officers and local authorities are overworked, they're under-resourced. We think there should be greater investments in the planning system, particularly with the investment in technology, perhaps, which could help accelerate planning applications coming through. Again, getting to site quickly is what's going to deliver more homes. And the planning system alone is just, it's under-resourced.
Thank you. And finally, Michael.
Yeah, very quickly. The key point is we can't access grant. It's not available for intermediate rent. And even if it was, it comes with strings attached to right to shared ownership, which breaks up the asset, which goes against the principle of build to rent, which is single ownership, single management. So we can't access grant, which means we're now, our viability is pressed by that. I think, how do I describe this? I think more politicians need to understand what the benefits are of build to rent, and then they might love it. And if they love it, they'll seek to create policies around it, like don't lose grant for this important sector. That grant means we can deliver less discount or less affordable housing, that loss of it. We don't really want to do that. Every single one of us, particularly the investors, it could all be intermediate rent, all of it, as long as the numbers work. But it can't be at the moment because of land values and construction costs, but it could be. We're not wedded to, it's got to be private rent. What we're wedded to is it needs to be an income stream that grows.
Thank you very much, Chair. I've got some questions coming up in the next sort of section, but I just wanted to follow up this section where we've been talking about the sort of structure of the market a little bit. I just wanted to get a bit more of an overview of your companies, because they are essentially for-profit companies. And that's one of the reasons why I think, the grant question comes up is housing associations, registered providers, we have the ability here in this country to hold them to account. And from what I've been hearing from you, I think, you are for-profit companies. You are talking about being owned by institutional investors. I've got the PLCs. Are these institutional investors the people who set up your companies? How do we find out these owners? And a little bit about, if that's right, to add loads of things into one question, a little bit about what happens, what risks there are in that model of ownership. If the market drops or rises, are there risks that they might be sold to someone else who we again can't reach or hold accountable? Those are sort of my questions there. I don't know which one of you, maybe Rebecca, I think you might be the best with the overview on that.
Sure.
I'm not asking about your particular companies.
No, that's fine. We've all got obviously different ownership structures and different pieces. So Long Harbour, we are an asset manager, and we set up a property management company called Way of Life, who manage our build-to-rent assets. So where in terms of there, it's a privately owned company, and 40% of the business is owned by a UK pension fund called OTPP, so Teachers Pension Plan of Canada. We then set up, in this instance, to invest in long-term joint venture structures with pension funds. Historically, we've worked with UK pensions, but in the current vehicles that we've got two Canadian pension plans again. One is PSP Investments, and one again is OTPP. That is publicly available in terms of those sorts of things. As we said, our investment thesis is to invest for the long term. In terms of the profits, you're right, we are for profit, but that profit is realised over a long period of time. So if you take a house builder, for example, as soon as they sell a unit, they make a profit on cost as you sit there. The reason we're so incentivised to deliver schemes quickly is because it takes a long period of time to fund back that investment. So, a 500 unit investment may cost us 270 million to deliver, but we may only be getting 11 million of income back over that period. So we're incentivised in that period, obviously, to make yield rather than a profit on cost model. So it's a different, and it is very much focused on the income. So that's how our business is structured. Of course, we have a fiduciary duty to our investors to manage their pension plans effectively and return their forecast investments. And so, as a free market, we could trade an asset at any particular time. But I think in terms of who we trade to and the others in the market, there has been what's been called a weight of capital chasing the market. That shouldn't be taken for granted, but those people that we trade to tend to be other pension plans and investors. So they're not private housing developers. And if you look at the US market and the institutional market, that is typically where things are traded. So other pension plans and the like. Mm-hmm. Is that helpful?
It is quite helpful. Anyone else want to add anything to that? I might have a follow-up as well.
Yeah, quite a few things to say. So Grainger's a PLC, so we're not an asset manager. We are an investor, an owner and operator of these assets for our shareholders. Business has been around for over 100 years, was founded in 1912. It's been a PLC for 30, 40 years. And our shareholders are wide and varied, and very often pension funds, because they're attracted by the long-term income, stability of income and the growth, which is indexed. And actually, I don't think, unless that's what you're looking for, I wouldn't think you would invest in Grainger. Grainger isn't a get-rich-quick vehicle. It is a long-term income vehicle. And therefore our shareholders will be interested in that. Our shareholders are obviously interested in providing housing and the ESG credentials that comes with. In terms of what keeps us honest, which I think is what you're suggesting, so we're a PLC, so there's various regulation in that, but I would say two things. First, we're no different than any other landlord in terms of what enforcement can be presented against us through the Effective Premises Act, etc., etc., etc. The affordable housing is covered by a Section 106 agreement. So all the normal enforcement provisions that you would expect to have over any landlord you've got. I think the most important thing, though, is alignment. And as we've alluded to, our shareholders expect us to deliver returns in a responsible way, and they want stable returns. They don't want peaks and troughs. They don't want bad reputation. They don't want empty buildings. And we only deliver for them if we deliver all of that. And the alignment is we have to keep our customers happy, and we have to fill our buildings in order to deliver that income. And then they're happy. If we don't do that, they won't invest, and they'll divest. And therefore, what would happen, I guess, the building would be sold to another operator, but it'll always be private rented with DMR. The DMR runs with the land, so it can't be sold out unless, of course, it just can't be sold out unless you go back for town planning. But that's in the purview of the GLA and the local authorities. Does that get to the heart of?
So you'd need a variation in planning permission to change the tenure.
The DMR, absolutely.
Yeah.
Yes.
I mean, I'm thinking of poor management or something that creates. Not just to there's something like the cladding crisis that means there is a liability. Is there a risk you'll sell them off? As far as I can tell, you're building assets without debt, and that must be attractive to investors.
No, there's debt. The debt is corporate debt generally, and sometimes it's project debt with other providers. Okay. So there's normally debt involved, but it's with shareholders' funds. Let's say some of that is debt. Getting to the point, if we don't manage the building, we don't get the income. So we're aligned to managing the building. If we do anything that, for example, if we had a damp and mould issue in a building or a fire, etc., and it showed that wipes out our license to operate for our shareholders. It has a massive impact on our ability to raise capital and to have interest in the sector. So we are 100% aligned, really, to manage these buildings well. Though I'll explain also, we talk about profit. The returns from this sector are income returns, which let's say are 4.5% maybe, and then capital appreciation of the asset. So after 30 years, it's worth more, but it's worth more really by the amount of rental inflation it gets. So that might be historically 3% is the historic rental inflation. So if we don't drive that, protect that value at the end, none of our models work. So if we hand over at the end of that 10 or 30 year period a building that is half empty, that is dilapidated, it will be worth nothing compared to what it should be. Again, vested interest, it's aligned with delivering good homes. Does that, can I get to the...
Yeah, I mean, I'm not trying to reach a conclusion here, just interested to hear from you.
Yep.
So if I may differentiate Telford from Grainger and Long Harbour. So as Michael described earlier, we're a developer. We're not an owner, a long-term owner and operator. We are developing generally for institutional capital or for the likes of Grainger and Long Harbour. And, you know, Telford actually was incorporated in 2000 and initially was delivering homes for sale. And together with the support of the GLA and a number of local authorities, we have delivered over 15,000 homes, actually, in total. Our focus has transitioned from homes for sale to homes for rent in response to the great need for more rental product in London, actually, over these last few years. So that is where our focus lies. I think what's important to acknowledge about the rental sector right now, and we know this being a developer, is that the quality standards that are required for long-term investment product is actually quite high. And as Rebecca mentioned earlier, I think sometimes that what's associated with quality is a sense of premium, but actually all Londoners deserve quality homes, and we are delivering to a higher standard. Institutional investors, as Michael just mentioned, they also require a higher standard because they are managing with a long-term investment strategy based on a 30-year maintenance cycle. So that is a more rigorous, disciplined way of delivery. In terms of how Telford are making our profit, we make our profit when we exit to our institutional investors, to the Long Harbours and Graingers of the world. Ultimately, we can only be profitable and we can only make our schemes viable if we know that upon exit, the price that Rebecca and her investors will actually make our scheme viable. So it is a direct relationship. And again, as I mentioned earlier, we are also delivering to registered providers. That component of our development viability is generally a net zero and sometimes a loss-making component of our schemes. So when we deliver to RPs, that drags the profitability of our schemes down quite considerably. So we at Telford are more interested in the certainty of the grant. That's more important to us because when we're delivering 500 homes, inevitably a number of those homes will be Section 106, low-cost, affordable housing. It's a very important part. You know, we believe in the hybrid of the low-cost and intermediate affordable rent because, again, that addresses the housing needs of the entire London population. But that is the most difficult part for a developer to deliver. And that's where, you know, we would be very much in support of greater visibility and clarity on that availability of grants, potentially even allowing the developer to have access to the grant rather than just the RP. But ultimately, again, as I mentioned earlier, we're driven by viability. We need to make a profit. We have stakeholders also, and that's directly linked to the ability to exit at a profitable position on PC. And that is to Rebecca's investors and to together netting off the impacts of delivering social housing.
Okay, great. I will need to move on to the next section now, although that has been very interesting.
Just before you move on, Assembly Member, just to the Deputy Mayor, you're hearing very clearly what our three professional guests are saying about grant, and we all know that the current rules mean that he's not going to change anytime soon. But could you imagine a situation where you would at least lobby the government to look slightly differently at how they provide grant? Could you see that as being possible?
Well, there are a couple of issues here we have to grapple with. Firstly, as you say, there is it has been specified by the government what tenures we are allowed to fund, and discount market rent is not one of those. That wasn't always the case. In the 16 to 23 programme, we could fund discount market rent home. I think you can take it, Chair, that I will always push for the maximum flexibility for us to be able to decide how to deploy this funding. So, yes, I would welcome that broader flexibility over tenure. But there's a further point which is probably even more significant, which is legally we can only give grant for rented homes to an RP. That's in the Housing and Regeneration Act. We can give grant for shared ownership to non-RPs. That's allowed. But for rented products, we have to give our grant to a registered provider. Now, some organisations have set up their own private registered providers, which enable us to do that. We have in the past been able to allocate funds through the developer-led route to a specific development, but only on the basis that an RP is then brought in for the rented products at a later stage. So I just want to sort of make it clear there are a couple of things here that we have to deal with. But in terms of the desire for a greater flexibility about how we deploy our funding, I'm always pushing for more flexibility over the programme, because I think that as the funding authority, as a devolved authority, we are best placed to make those decisions.
Okay, thank you. This is a fascinating part of the discussion, but we are under time pressure as the Assembly Member.
Okay, I might bring forward, because grants is something I was trying to hold off on asking about, but I might jump in now with that. So, Tom, this is a really interesting one, and partly why I was starting to ask about accountability there as well. Do you agree with this idea that we should only give grant where we've got registered providers? Presumably that means they come under the housing ombudsman, the social housing regulator, and all of that, and they wouldn't if they were private.
Yes, I agree with that, particularly because this is public money. Well, I would say, as I understand it, the private rented sector more generally is going to be brought into an ombudsman, which may be the current ombudsman under the Renters Reform Bill, subject to that actually becoming law, which I very much hope that it will. But I do think in principle when we're giving out a grant, we need to have that oversight. What I would say is private RPs do fall under that as well. We do also have some extra scrutiny that we deploy, and extra requirements when we give out money to private RPs.
Thank you very much. But in general, would you say that you believe that this is, on the scale of things, obviously it's not as good as social housing in terms of affordability. Would you agree that it comes above shared ownership, though, in terms of its attractiveness, its ability to support affordable tenures and people into more affordable lives, or potentially home ownership?
Yes, to me it certainly does, and I think that I don't have the figures at the top of my head in terms of the income profiles of people who are accessing different intermediate tenures, but I think that obviously it would depend on where the discount market rent is set in terms of market rents, but generally that's going to be more accessible to people on lower incomes, households on lower incomes, than shared ownership, and obviously doesn't come with the need to have a deposit up front in the way that shared ownership does. So I do think that it can play an important role, and that's why this is supported through the London Plan. Discount market rent is supported through the London Plan for build-to-rent schemes.
Excellent. And as part of the discussion, I just started with the providers there. It seems like they're very, 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 very clear that these homes are going to be affordable in perpetuity, which shared ownership is not, is it? It goes into ownership eventually, and then it's gone. So potentially this is a good value use of public funds in that you secure more public benefit for longer. Is that right?
What I would say about shared ownership, of course, is that as people staircase and when units are sold outright, eventually, we do get the grant back. We claw that grant back to reinvest in housing. Obviously, with discount market rent, if we were to be able to give out grant for that would sit there, in perpetuity, unless, of course, the unit was then sold off at some point in the future, and it was no longer going to be an affordable product, in which case, again, the grant would come back.
Sorry, can I add just a wrinkle there, because that's not. So the grant. So if you've got a DMR and the money's been provided to an RP, which it has to be, the only way for the RP to sell those homes, we're still with the Section 106 DMR, to a non-RP, is to pay back the grant.
Right.
So it goes hand in hand. If you've got the GLA's money, the government's money, you have to be an RP. If you don't want to be an RP, you have to pay the money back.
Right, yeah, that makes sense.
But it doesn't move out of
I'm going to ask my regular question
Please
now,
do,
Chair.
because you begin to stir and have people's
Yeah,
questions.
I've got behind time, and it's all my fault. So we want to talk to you, Tom, about and Vicky and John about the record to date of the GLA. So, can I ask, what impact has the GLA's approach to build to rent had on the sector, and has it affected the number of build to rent schemes coming forwards?
Yes, I'm happy to come in on this. So I'm trying to find the figure for the number of... I think it's been... correct me if I'm wrong, Vicky. Since we brought in the H11 pathway under the London plan, I think 54 developments of build-to-rent developments have come in, covering around 17,000, more than 17,000 homes. This policy, I think, was the first policy of its kind in the country to recognise build-to-rent. It encourages, or I think it requires, actually, boroughs, I mean, this sort of touches on what we were talking about earlier, requires boroughs to take a positive response to build-to-rent. And indeed, in the latest figures I've seen for the last 12 months up to Q3 2023 is we've seen an 11% growth in the build-to-rent sector in London. So although it's still only overall a relatively small part of London's housing market, about 1.1% of the total housing stock, that has been increasing rapidly over the last few years.
Thank you. And Vicky, this comes under your remit within Tom's team. Have you got any... You're obviously seeing more and more of it. Have you got any thoughts to share with us initially?
Well, it actually comes under John's team more than mine, so I'm going to hand it over to John.
Do you not keep an eye on it?
We do. It's a small part of the private rented sector, and our focus is shared with planning, so I'm going to pass
Okay, fair enough. A planning question then, John.
Yep, thank you. So as Tom says, actually, the GLA introduced the first policy around this. It was the 2017 Affordable Housing and Viability SPG, and then went into the London plan. So we've been operating this now for about 6 years. The London plan added on to that by including build-to-rent within the threshold approach, enabling schemes to be fast-tracked. That wasn't the case in the original guidance from 2017. And as Tom says, the number of build-to-rent schemes has increased over that period. The figures I have, £15 billion worth of investment since 2015, record level in 2022, 2.7 billion. That was 46% higher than the previous year, albeit there are significant market challenges at the moment, as we've heard this morning. In terms of the number of referable applications, Tom mentioned the 54 schemes that we've dealt with. We've also had a mix of build-for-sale and build-to-rent schemes. I think we're seeing more of that now, particularly as the build-for-sale market has dropped off. So in almost all of the really large developments, there is likely to be an element of build-to-rent now, and I think we heard about that and the increase in partnerships that are taking place across the sector. So from that perspective, build-to-rent has been a really important alternative type of affordable and market provision to diversify the overall sector, provide more choice for Londoners, but also bring more funding into the overall residential market, and to help developments take place that probably wouldn't have done otherwise. I think the rents in the sector generally are higher than the wider private rented sector, and so that is why it's important to get affordable housing. And the figures that we've got for referable applications between 2020 and 22 show that just shy of half of the build-to-rent schemes followed the fast-track route, kind of around about 41%, and achieving an average of 34% affordable housing. So that's broadly where we were after a couple of years of applying the threshold approach to the build-for-sale market, given that the threshold approach came slightly later through the London plan. So overall, I think it has been a really important part of the sector, and particularly at the moment, and is likely to be over the next few years as well.
Okay, thank you very much. Chair, I think we might benefit from moving on to question 8 at this point, because we want to hear more from Tom's team, and then we're coming back at 11 for perspectives from the sector, and we can just do that then.
I think you're correct. Assembly Member Cooper?
Well, I think I'm going to do 20 minutes like the previous Assembly member, asking a few questions in background. Could you tell me a few more things about the companies that you all work for? Because I know nothing about them and haven't had the opportunity to research anything. I mean, seriously. Right, I actually wanted to ask something to the Deputy Mayor about the Mayor's housing strategy, which said that he would explore how the rents charged for build-to-rent homes can be monitored, recognising that data relating to this is currently very limited. What work has the GLA done on monitoring rent levels in this area? And I'll start with Tom, if that's one for you, unless that's something that Vicky can help with.
I might need Vicky's help on this one, actually, Assembly Member Cooper.
Could I just remind John to turn off your microphone? Thanks.
Sorry, I've just got to get to the relevant part of my briefing, I think, Assembly Member Cooper.
Sure, it obviously speaks very strongly to the issue about affordability.
Yes.
And I think also, personally, I think it speaks to the issue about maintaining high levels of occupancy, whilst at the same time I can understand meeting the requirements of investors. Obviously, if you set very sharp rent levels, then you're more likely to hang on to your people who've moved in. But what are we doing from the GLA side to monitor all of this?
I think the information that I've got here is some sort of external monitoring. Is that right, Vicky? We might have to come back to you and write to you about this one, Assembly Member Cooper. This was not on the top of my mind, I'm afraid.
Okay.
Or Vicky and John, sorry.
There we go. So there have been several external reports as well as information that's available to the GLA. So Business London have produced a report, and they update it annually, setting out details of incomes of residents. JLL have also published a tenant survey 2022. And broadly speaking, residents are paying around about 30% of their rent. I think Mike referred to that figure previously. I think incomes tend to be higher in the private part of these developments. But of course, the affordable housing, the rents are restricted through the Section 106 agreement, and I could just speak a bit to that as well. So the requirements around discount market rent are that total housing costs should not exceed more than 40% of net income, and to follow the fast track, at least 30% of the units need to be at the equivalent of London living rents, which are published and updated annually by the Mayor. The remaining units need to be at a range of discounts to market rent. Based on the 40% net income figure, there's also an extra safeguard that the rents shouldn't exceed more than 80% of market rent as well. And just to add, last year we published updated affordable housing guidance and viability guidance. We spoke to that at the Planning Committee last year. So that has a section on build to rent. It reiterates the London Plan approach, the support for build to rent, and all the affordability requirements that I've just mentioned now. It also actually includes additional support for key workers, and going to the point earlier, and encourages councils in particular to bring forward those intermediate waiting lists and prioritise key workers as part of the allocation of those units. There are various other sources of information that we have as well. I think there is some information published on the London Data Store as well as other market reports.
So essentially, would you agree that the rents are broadly being set in line with the top end of whatever the limits are, the 30% of income or the 80% of market?
For the affordable housing, yes, they are, because we secure that through Section 106 agreements.
Are you aware, and obviously there's always this sort of competition, isn't there, when you're doing there's a development being done that might be of a mixture of different types of output, that the introduction of build to rent in a particular area is squeezing out social rented, so that if there's a limited space on a development, that sometimes things are going over towards build to rent rather than social rented? Do we know if that's happening?
I think there are certain areas that are particularly attractive for build to rent provision, and that was referred to earlier, particularly around transport nodes. Build to rent tends to work best not in the very high value areas, but in the sort of outer outer inner rim, so Stratfords, Wembley, Croydon, that sort of area. I should say, though, that some councils do have specific build-to-rent policies which they've taken through local plan examinations, and they still do require an element of low-cost rent. And we've heard about the different models of delivery today, and developers like Telford do provide an element of low-cost rent alongside the build-to-rent and other types of affordable housing as well.
Yes, I think right at the top, the answer to the chair when he started was especially around transport nodes, zones 2 to 4, East London and West London particularly. So that's very interesting. And I do wonder whether that is also partly because of the arrival of the Elizabeth line, which has made some parts of East London and West London much more accessible. I can see a lot of nodding heads at that comment, so that's interesting. Could I come back to the Deputy Mayor? What has the Mayor done to incentivise the build-to-rent schemes that are targeted at the low and the mid range of the market, not just at the high range? I actually really take your point about premium. Just as a quick aside, I think premium, I don't think should be applied to the rent. I think you need to differentiate that much more carefully, as we were saying, and apply it to the status of and the type of the property type. But looking here just at the rent, what has the Mayor been doing to incentivise at the sort of low range and the mid range to ensure that there is this full range of homes that are affordable to all Londoners who obviously are on a wide range of incomes?
Well, that would be through our planning policies, promoting and pushing discount market rent. Also, specifically within that, in order for schemes to access the fast track route, having to provide at least 30% of that at London living rent levels. So this is making sure that we are getting schemes coming forward with price points that allow people on a range of incomes to ensure that they're able to live there.
On that point, about the threshold approach, the fast-track route for developments, which provides that at least 35% of the units should be at discount market rent. So far, how many build-to-rent schemes have followed that threshold approach? Do we know?
I'm going to have to try and dig these out. So I think, do you want to go on this one, John?
Yes.
Out of the 54 that we've had.
Well, I have figures from between 2020 and 22, and what we've seen is more and more schemes follow the fast-track route over time. That's been the same within the build-to-rent sector and build-for-sale. So I think I mentioned this before, 41% of schemes within those 3 years have followed the fast-track route, and that's a significant increase on the initial couple of years when the policy was introduced.
So what was it in the first couple of years? It was up to 41%, you're saying now. What was it to begin with?
Just bear with me. I think I do have those figures somewhere.
If not, we can certainly get them to you, Assembly Member, and the committee, Assembly Member Cooper. But as John says, we've seen across the board, we've seen more and more schemes following the fast-track route. OK,
thanks very much. I think I'm going to pass over to my colleague, Assembly Member Sheikh, who I think might continue with the questions.
To see you taking over the chairship, please. Away you go, Assembly Member Sheikh.
I thought before another 20 minutes of Assembly Member Berry.
Enough of that. Away you go, Assembly Member Sheikh.
Thank you, Chair. Good morning. I think we're still in the morning to the panel. I found this conversation fascinating, and a particular sort of welcome to John. I think we've had a lot of conversations on the Planning Committee, so it's really great to have you here on the Housing Committee. I will continue on Assembly Member Cooper's line of questioning around the threshold approach and how it's benefited London in terms of delivering the housing that we need. I think 41% of applications sort of passing through the threshold approach is positive, especially if we're seeing an increase. And my understanding resoundingly is across the board it's helped London deliver homes, particularly affordable homes, which is much needed. So I just wanted to come to Rebecca, Lesley and Michael and ask your experience of interacting with the threshold approach, and if you have used it specifically for the build-to-rent schemes, and what's your experience of that been?
There was a comment said earlier. So the fast-track approach isn't that you deliver 35% DMR. That's not what it does. The fast-track approach is that it's 35% at what the local authority deems to be affordable homes, which is often social rent and shared ownership. So we've not been able to avail ourselves of the fast-track route because actually the local authority don't want 35% DMR. They want what they want, and therefore we have to go through the viability route to demonstrate what it is we can deliver, which generally is historically we've got to the 35, and in fact with TfL, as you'll hear later, it's 40. But we have to go to viability tested route because the local authority isn't aligned with the definition of fast track that the GLA might suggest. So it's not 35% of DMR. It's not the fast track route. I think that's right, John.
Well, just to say that sometimes if a scheme meets the London plan requirements, it may be fast-tracked from a GLA perspective.
Yes, yeah, but not local authority.
But not the local authority. So what that means is that the GLA wouldn't necessarily be looking at the viability, the GLA wouldn't be insisting on late-stage reviews, but local authorities might take a different approach. So it's a sort of hybrid in a way.
Yes.
Thank you. Michael, can you make a differentiation between the applications that you end up having to go via the viability route through because of local councils' limitations versus the ones that are referred to the GLA? Do you have those figures to hand?
Well, every scheme has to go through viability tested route. We've not done one fast-tracked route, and even though we're delivering high levels of affordable housing, so that will be in the last couple of years, 10 schemes in London.
Okay, but that still allowed you to reach the 35% affordable.
We have been able to reach the correct. The key bit is the type of affordable. So it's the level of intermediate.
Yeah.
So I go back to if I go to a local authority, typically with a build to rent scheme, they're interested in the maximum amount of social rent. That's their end game generally. If I demonstrate to them that I can't afford that amount of social rent, they would rather I built student or private for sale, because they're only interested in the maximum amount of social rent. So we end up in quite a long discussion about, well, but we can't afford to give you that percentage at that rent. We can give you that rent at a lower percentage, but we can't give you both. So that's often the discussion. I mean, that frankly is the heart of the viability assessment, I think, that we go through, which is we're delivering the maximum of what we can deliver as DMR and hitting that threshold.
Okay, thank you. Can I bring in Lesley and Rebecca?
So we do, in general, seek to use the fast-track route, but then we are indeed in that negotiation with the local authority in terms of what is the right mix of the 35% affordable. Again, as I mentioned earlier, we do seek to deliver a significant proportion of the low-cost Section 106 affordable rent, but that is, again, difficult on a viability basis. So we do seek the fast-track route, but it perhaps is not as fast as we'd like, because it is that discussion about what is the right hybrid between the low-cost and the intermediate affordable housing product.
Sorry, if I may, because the flip side of the social rent is shared ownership. You're basically polarised. Social rent, shared ownership, or perhaps LLR. Shared ownership does wash its face and is valuable, but we don't use it because it's single ownership, single management. So we can't cross-subsidise. All we've got is DMR in the middle, intermediate rent to play with.
Whereas because we have two clients, basically. We will have an RP client and we will have an institutional client, such as Rebecca or Michael. We then try to offer a hybrid between the low cost and the shared ownership, which an RP will take up. Also DMR and DMR, which is for the private institutional investor.
Okay, much room for streamlining from what I can see. Much need for it, rather. Rebecca?
I was going to say exactly that there's a lack of consistency, and I think you've heard that from the panel today. So it depends on if I'm buying a building which is part of a wider master plan where there has been social and shared ownership, or if it's just one building. It depends on the local authority. There's definitely a need for consistency.
Okay, and in danger of repeating Senator Moama's question earlier in terms of what the government could do in order to help with that streamlining and consistency, could I just ask for a kind of summary repeat of what would help? Michael, I'll start with yourself, Lesley, and Rebecca again.
I think I said earlier on that I don't think anything will happen until the government and local authorities really come to understand the benefit of build to rent, and then there are lots of levers they can pull. I don't think it's helpful that grant can't be applied to it, so that impacts our ability to deliver for sure. I think there could be more flexibility around the type of affordable housing and the rent levels. For example, would it be terrible if the rents were lower but there was less affordable housing as a percentage? Would that be, those sort of things aren't discussed. So I think flexibility, but if it was Christmas again, I'd be asking for some love and some trust.
Some love and some trust, okay, thank you. And access to grant. Lesley and Rebecca, did you want to add anything?
In the same tone and narrative, I would say, we would appreciate a more consistent approach to build to rent across all the various local authorities. A more open and transparent dialogue, a mutual understanding between local authorities and developers on our individual and independent requirements, because ultimately we all want to deliver housing, right? Nobody denies that whatsoever. It's about how to do it in partnership. We would like to work in partnership with local authorities and to achieve what the entire country needs, but particularly in London. And again, I will echo again. I think investments in resources for planning officers and local authorities would help immensely. They are under-resourced. And ultimately, the faster we can get applications through the planning system, and it's no fault of their own, they do a fantastic job, they're overworked. Anything we can do to alleviate and help them along would be fantastically received.
Thank you.
I think just coming to the messaging, I think we as a sector could help the understanding further. I know the BPF, we're working with the Quality of Life Foundation on residents' experiences within our buildings so that we can demonstrate what it's like to live in the building and how we're self-governing, coming back to the earlier questions. I think more recognition of what's happening on the Home Views platform. That's a private platform. It's almost like TripAdvisor for living in homes. It's voted, it's ranked by residents who live within buildings in both Build for Sell and the PRS and Build to Rent. That is a website you can go onto at any time, and management, quality of service, quality of building and pricing is all ranked. So a better understanding of that. And then I think, at the moment, the sector's currently subject to selective licensing in lots of locations. That selective licensing should technically be looking at the quality of the homes and help to govern. What we've seen to date is it tends to be an income stream and not much intervention. So I think there's opportunity for local authorities to work with single owners of buildings in that light. But as I said, I think a much better education piece and then looking at the options on how we can promote faster development would be helpful.
Okay, thank you. That was really informative. Tom and John, I'll bring you in now. I think I probably know the answer to this question. I think it's sort of been laid out quite clearly as to the limitations. But has the GLA considered increasing the threshold higher than 35% for affordable homes on the build to rent schemes, and what impact would this have? Don't worry, I disclaimed it. And can I also fold into that question a little bit of what I was suggesting, which is, or asking off the back of Assembly Member's question, which is what could the government do to enable the GLA to help steer councils in a sort of consistent approach to build to rent? So shall I start with you, Tom, and then bring in John?
Yeah, sure. I mean, on the threshold, so the threshold approach itself, as part of the originally the guidance that was produced, I think back in 2017, then for the London Plan. I mean, that in itself has been viability tested as a level which is acceptable in London and which incentivises delivery. There is some work, as you know, that's ongoing at the moment to produce Development Viability London Plan, revised Development Viability London Plan guidance, which we're expecting to publish later this year. I don't think that's going to see any change in the overall level of that we expect for the fast track route. John might be able to comment on some of the more of the detail behind all of this.
Thank you, Tom.
Thanks, Tom. Yeah, I mean, just to add that the 35% threshold applies for private land, but there is the higher threshold, 50% for industrial and for public land, subject to various exceptions set out in the guidance. So we do see schemes coming forward with high levels of affordable housing. I know the next session is on the TfL Connected London Living sites, which we're generally delivering 40%, and we have a number of Telford schemes delivering at least 40% as well, with a good mix of tenures. So, I mean, it is something that we'll keep under review. We will need to do testing for the next iteration of the London plan. I think at the moment, with market conditions being where they are, it doesn't seem like the right time to be increasing that. It's always a balance in terms of trying to incentivise the route of the fast track, whilst at the same time enabling schemes that genuinely can't do that to follow the viability tested route. So if you set the threshold too high, what probably happens is that you get more viability tested schemes and you may end up with less affordable housing overall. So broadly we think we've got that about right, but there are measures through the new London Plan guidance where we're looking to support build to rent further. One of the things that we've consulted on is increasing the income caps for intermediate rent, which at 60,000 have been lower than for shared ownership, but we're looking at a small increase in that to reflect changes of incomes. That will increase eligibility, but also will increase maximum housing costs, which should support delivery and viability as well. And we're thinking about how that might change over time as well.
Thank you, and I would agree with that analysis. I think we've landed in the right place, and I think keeping it under assessment will be fruitful. But the other benefits for build to rent, like increasing the cap for intermediate rent, I think is ways of facilitating this particular sector.
Could I just add very quickly, just coming back to your question earlier, actually very few build-to-rent schemes follow the fast-track route in the initial years, and I think that's because at that stage the threshold approach, and I'm talking from 2017, wasn't applicable through the guidance. It was only included in the London Plan, which was published, I think, end of 2017, but carried very, very little weight at that stage in the process. And it was only once it went through the examination in public and was adopted in 2021 that it carried full weight. So that's why we saw very few schemes following the fast track route up to 2020. As the London Plan had more weight, that's when we started to see the higher proportion. So between 2020, the plan was adopted, in 2021, the latest figures we have go to 2022. That's when it ramped up to around 40%.
Yeah, no, 41% I think is a really great place to have landed as well. Okay, my final question, so I can pass back over to the chair. The GLAs, and this speaks to a little bit of what we were hearing from Michael and others, which is the GLA's viability guidance says that local authorities may set their own policies requiring a level of social rent on build-to-rent schemes. Are there any risks to this approach? Tom and John.
I think probably there might be a slight difference of opinion potentially between some members on the panel. Look, I think we've heard very clearly the sector would like a focus on discount market rent.
Yeah.
I think local authorities will always have a view on what is most needed in their areas, and local authorities are particularly focused, for obvious reasons, on delivery of social rent, because they're looking at their housing waiting list, they're looking at their temporary accommodation crisis, on which they're spending across London £60 million a month at the moment. And I think there was a question, or someone, I think one Assembly member mentioned, or might have been you actually, sorry Michael, mentioned, would you, local authorities accepting an overall lower level of affordable if the affordable is more affordable, as it were. And I think we are seeing local councils saying we will accept a lower level of affordable housing if there's more social on the scheme, and that's something that local councils are prioritising. So I understand why councils, taking into account their own local circumstances, are particularly focused on social rent. What I think that the London Plan does, and what the Mayor's policy do, is create this alternative framework by which we can be delivering build-to-rent schemes with discount market rent as well.
Okay, so you think we're getting the balance right, basically?
I think that local councils have to have an eye on what's happening locally, but going back to the discussion that we had right at the start of the meeting, there's also, I think, some work to do in terms of promoting the benefits of the build-to-rent model more broadly to local councils.
Okay, thank you, Tom. John, did you want to add anything?
Just very briefly, and going back to the Chair's question at the beginning about the need for different types of accommodation, I've got the figures from the Strategic Housing Market Assessment here. Indicates a requirement of around 30,000 low-cost rent homes per year, and that's 11,600 for intermediate. So still significant for intermediate, different types of intermediate, but broadly a third of the requirement for low-cost rent. So I think that partly explains the approach of boroughs. During the examination process for London Plan, we had the discussions about trying to get the right balance here. As Tom sets out, the London Plan is very much the default position is around provision of discount market rent. However, in order to enable some councils still to support it and bring forward policies that would enable certain schemes to follow the fast-track route and not be slowed down by viability testing. It enables councils to bring forward their own policies, but they have to go through examination, so they have to present evidence to an external examiner, normally from the planning inspectorate, to demonstrate that that is justified.
Yeah.
But we continue to work with boroughs around their approach to build to rent. We have quarterly meetings through the London Authority's Viability Group, which is a good forum for us to be communicating those kinds of messages, and that is something that we do discuss.
Yeah, no, I mean, I totally agree with you. I would suggest that those assessments by local authorities are made based on the needs of their residents, their local plans, and like Tom said, temporary accommodation and, waiting lists are escalating, and as are the costs. So I can see why there's a preference that leans towards social rent. Lesley, you did indicate, did you want to come in? Or?
Well, I would say that while to add on to that comment, I agree. Each local authority knows their own requirements. What would be helpful, however, is a clear message as to what that proportion of low-cost social rent provision is that they require, so that it is not a question mark every time you're going in with a new planning application in their local authority, knowing how much of a proportion of affordable rent they require to be social rent.
Yeah.
Helps developers price that element in.
Yeah, the certainty.
It's a certainty.
Yeah, no, of course.
It's all about certainty.
Yeah, and it comes back to the point around consistency more broadly.
Exactly.
Thank you, Lesley. Chair, I'll pass back over to you.
Thank you very much. I'll take the next question. Before I move on, though, when you're planning a scheme, do you adjust the level of rent relative to how many affordable housing properties you're going to have to deliver for the council? Is that something you do? So if you developed in a very, for want of a better word, upscale place where you could charge more rent, would that give you more opportunity to have more social rent properties?
So what you've raised there is something I wanted to bring to the attention of the committee, which is that build to rent isn't one thing. So when we talk about build to rent, there are different operators with different models. And out in the market, particularly zone 1, maybe zone 2, there are operators that deliver what you might call premium build to rent, and that's much larger elements of service and amenity and much higher rents. And you might see that in Canary Wharf and Nine Elms particularly. The vast majority, and King's Cross, the vast majority of operators are what we call mid-market. And so, for example, Grainger, I think the same for L&G, Long Harbour and others, we're not interested in a premium product, like a premium product, what you might call 5-star. We're wanting to serve the largest cohort of potential customers there are. And so what we do is we go into a local area, we look at average wages in that area and look at our rent levels and go, right, well, the rents here would appear to be this for the private rented sector. That's how we do it. And then the affordable is the debate around viability with a local authority and need. We don't seek to change our model to go to a higher rent level with larger amenity and costs in order to deliver more social rent.
Right, okay.
Because that's not what the product we're trying to deliver for our customers. I would also say it's early days in the sector. I personally wait to see how resilient the premium sector is. And you can imagine where you're going to really high rents, you might have greater voids, greater churn, or all those things that don't bring stability of income. So Grainger and most build-to-rent operators want to steer down the middle of the mid-market product for build-to-rent, not premium.
Okay, that's interesting, because your model is basically about a steady return.
Steady return to a large cohort of demand.
Okay.
And I would say that mirrors the most successful markets internationally also, right? When you look at Europe or America, where you have a much higher proportion of built-to-rent product, actually you are servicing the largest part of the working population. And actually, built-to-rent becomes a very reliable supply of housing for up to 50% of the population in a country like Germany, or even 25% in Spain, 40% in Austria. It is a professionally managed, well-designed, long-lasting product, which is institutionally invested, and rents are inflation-linked, which protects both the landlord and the occupier. And in these markets, many people are lifelong renters. And actually, they are very happy renting for the vast majority of their lifetimes. And instead of purchasing a home, they take their savings and they invest in the economy, either developing their own businesses or investing in the markets. So I think, delivering homes for that middle, large proportion of the population is what's most necessary.
Okay, thank you. I'm going to move on slightly. The Mayor's housing strategy includes 5 management standards for build-to-rent schemes. What is the GLA doing to ensure that these standards continue to be upheld once a scheme is completed? I'll start with the Deputy Mayor and maybe move on to his team.
So there are also criteria in the London Plan which set out to ensure that build-to-rent schemes are properly managed and attractive to tenants. So this can be things, for example, around lease length. So we require a length of lease of at least 3 years for residents, unless tenants request a shorter amount of time. All of the requirements in the London Plan in relation to build to rent are secured and enforceable through Section 106 agreements. So it's the responsibility of councils as the local planning authority to monitor and to ensure that those standards are maintained.
Vicky, John, anything to add? Don't feel obliged to. I'm just being polite. I want to say earlier on, when somebody says anything to add, you do not have to fill that void.
Actually, just one small point. Tom mentioned that the requirements are secured through Section 106. We have standard Section 106 clauses for build to rent, so that avoids having to negotiate them every single time. Those are widely used across London now, and they set out the legal version of the policy within the London Plan and ensure that all those requirements around lease length management, rent certainty are all clearly set out within the 106, and it's fairly straightforward to negotiate that because of those standard templates are used widely across London.
Okay, thank you. I'm going to come to Rebecca first. Is there a need for more oversight and standards in the build-to-rent sector?
I think we touched on it before. I think the nature of our investors means that we are much more socially conscious and self-governing. It is the way that we attract further investment, and it is the way that we meet the objectives of our long-term investors who have quite stringent social responsibility requirements. I mentioned again before that we are actively trying to push reporting methods in the sector. So, as I said before, the BPF's partnering with the Quality of Life Foundation. They are working with a number of different operators, including ourselves, to go in and speak to residents to see what the experience is like and to start measuring people's satisfaction within the assets. As I mentioned before, we are subject to selective licensing in quite a lot of our locations. For us, we haven't seen any benefit in that. We've just seen a cost going out the door and no real governance. I don't think any of the sector would reject any opportunity for further oversight, but I would say that where there is less intervention, so if you look at the regional cities or regional locations in the UK, we've seen a lot more housing delivery because it's much easier to deliver and keep up with our requirements. But again, we have oversight through the Section 106. We have to negotiate our discount to market rents units every year. We have to be transparent on what we're achieving in the building. And so I think there is a whole level of transparency, and you're probably pushing on an open door. But you need to be careful not to have a policy environment which starts to restrict operations and delivery of housing, because that's what we're all focused on.
Okay. Lesley?
I was just going to add that, ultimately what we deliver is dictated by the institutional investor, and they do have extremely high standards. And I would say that in general, as a general statement, the built-to-rent product is of a higher standard and of a higher design quality than most housing. And I would also go as far to say that I believe that the housing that's being delivered in London in particular is of a higher standard than what's being delivered in the regions, actually. So I think the GLA have done a good job in ensuring that high design standards have been maintained and are being delivered. But ultimately, investors in build-to-rent, again, they have a long-term investment strategy. They want resilient, long-lasting properties, and they are asking us as developers to deliver properties that can be managed on a 30-year maintenance cycle. So I believe that the design standards are actually high and are self-governing.
My final question to Deputy Mayor before I go to another member. I saw you nodding when Lesley said the GLA have done a good job. I just thought I'd point out, I saw you said the GLA would have done a good job in driving standards in the build-to-rent sector. I asked you the same question. Do you feel like there's more need for oversight, or are you happy with the level of oversight you have currently?
I mean, nothing immediately springs to mind. I mean, there's, the Mayor's very supportive, for example, of the measures within that are contained within the Renters Reform Bill, and indeed in some areas, as you know, would like to go further in order to provide better standards for tenants. Across the board in the private rented sector, but that, of course, is not specific to build to rent, where I think, management standards, design standards, etc., tend to be higher anyway. That's just in relation to the broader private renters sector. So, in terms of build to rent specifically, beyond wanting the higher standards across the sector as a whole, there's nothing immediately that springs to mind, Chair.
Okay, thank you. Assembly Member Moema.
What a beautiful accidental segue. Okay, so my final question is to Michael, Lesley and Rebecca, and I wanted to ask you your views of the Renters Reform Bill and its impacts on your business and your business models, but also your operations. Obviously, from what we talked about today, Build to rent does seem best in class in terms of management and what you get for your money. Obviously, we have questions about the cost, but it is there. But, really important things to Londoners like longer tenancies and security. And the principle, it seems like if you've got a pension fund that wants a particular return every year, in principle, a rent escalator should be no problem. But I just wonder what your views are on the impact of the Renters Reform Bill will be on you.
Just to pick up on the point about which is related to this, we believe we're professionalising the landlord sector. That's what we're doing, and therefore we're the last people that you should be focused on in terms of enforcement. When you've got 5 million PRS homes, you should be. That isn't to say we don't welcome it, but what we do not like is having to pay for it, which impacts our returns. And for no added value. It's not going to add value to our customers. We're 99% occupied. That should tell you everything you need to know. In terms of Renters Reform Bill, there are a couple of... We get it, and there's an awful lot we already do in that. And in fact, the GLA standards for build to rent, I think we wrote them. Those are things that we can easily sign up to because they're central to our business model. Two areas in the Rental Reform Bill which cause problems is no minimum tenancy. So you just talked about pension funds. That means that we have no security of people signing up for leases. They can leave after a month, so that kind of sends it a bit too far the other way. Now, whether or not
can you just explain? So at the moment, you can stay for as long as you like.
So we have, I think we offer up to 5 years, and within that, if they go to 3-5 years, there will be an escalator in it, which will be CPI or something similar. So that again, it's index linked to the most important thing for us, which is inflation. If we don't index link to inflation, effectively our operating costs go up and our income relatively goes down, and therefore we're not delivering for our shareholders, and also it impacts the ongoing management of the building. So we need index linking of our incomes, and we want our people to stay, but what we don't want them is to just leave every minute. The whole purpose of Build to Rent is creating communities. We want people to sign up for 3 years. Brilliant. 5 years. Fantastic. We want them to stay at least 6 months. Otherwise, how are we doing that? How are we building that community? So that's the first thing. I think, as I say, on indexing, it's incredibly important that those income streams are indexed. Over to you, Rebecca, while I think of other things.
I think the other challenge is really is the rent setting and the escalating at the moment, and having that governed by an independent board. I understand the need for it, but particularly where the courts are at the moment in terms of troubled tenants or even just in operating a business, again, too much intervention may not help the resident or the landlord. So again, we in terms of the rental reform, there is a lot that we welcome and that we already do. We do offer minimum three-year tenancies. Interestingly, on average across our portfolio, our average tenancy length is 12.3 months, and that just seems to be a driver by customers rather than from ourselves.
Can I jump in? So our average tenancy length is probably similar, but people stay 3.5 years.
Well, I was going to say
they renew, so they don't want
people
the long
still renew,
lease.
but the average tenancy length tends to be that same length. So I think making sure that the courts and the provisions around rent setting and how the escalator works is fundamental. Otherwise, you get into a position of rent control, which I know neither party, is supporting at the moment. But that rent caps has demonstrated to stop institutional investment and also slow the delivery of housing. Full stop, which is something none of us need.
Okay.
Just the other thing to add is to do with the ability to manage the building, and there is nothing worse for a build-to-rent development than disruptive antisocial behaviour, because people just vote with their feet, and you suddenly lose a floor. And we've had, you can imagine, various things. So the balance of, we're very happy to go along with the balance of power that's addressed, as long as we can still do what we need to do, which is to deliver safe communities and a return to our shareholders.
That is really fascinating, and I'm really pleased that somebody has come to the committee and talked about proof of concept, and specifically from the private sector, about how you can include that security for a tenant and still have a viable business. It'd be really great to have, if you have any written materials outlining that, and particularly the model around the rent setting and the escalator, that'd be really helpful. But I'll pass back to you, Chair.
Thank you. We have been joined in the chamber by St Bartholomew's CAV Schools. Nice to see you all. You are listening to our talk about housing in London. So we're figuring out how people slightly older than you, so this will affect you, how they can rent in London. So these very clever people in front of you have all the answers, and I'm just trying to get out of them. And the Deputy Mayor is very pleased because people have said what a good job his team's doing. So it's very nice to see you all. Right, that brings us to the end of our first, I was going to say half, the first section of our investigation this morning into Build to Rent. I'd like to thank our guests. I often say this, but I really mean you've been a real education. It's been very fascinating listening to you. We're about to have a 10-minute recess while we swap over to our next guest. I do believe Michael is staying. He's so fond of us. He can't tear himself away, so he'll stay. And the rest of us, I'll release you to the wild. Again, thank you so much for coming and giving us the benefit of your knowledge. But for the minute, we'll have an adjournment. Thank you, and I'd like to welcome you back to this afternoon meeting of the Housing Committee, where our main item for business is the build-to-rent sector. We've had a slight change in our guest. We now welcome Ben Tate. Head of Property Development, Build-to-Rent for Places for London, the TfL Property Company. And rejoining us is Michael Keaveney, Director of Land and Development for Grainger PLC. Welcome to you, Ben. No pressure, Ben. The first panel were absolutely excellent, so I don't want to put you under any pressure. There you go. If we kick off with Assembly Member Devonish.
Thank you, Chairman. Apologies for being a little late this morning. I was at another housing meeting with the regulators, so in my defence. No, I wasn't in Brighton with Assembly Member Berry, no. So good afternoon to Ben and Michael. My question to you is, how many starts have been delivered against the TfL and Grainger build for rent targets so far, please? And when are all of the build-to-rent homes expected to be both started, or as we like to say in the Conservative group, actually when they're actually can be completed, please?
Okay, good morning. I'd maybe just start with a little bit of context, just in terms of Places for London, which was set up last year, as many of you will know, as TfL's property subsidiary, with the remit effectively to make the best use of our real estate and also to deliver 20,000 homes. Obviously, build to rent is a core component of our overall strategy. It forms part of our strategy to deliver long-term income. Part of the reason for that is to diversify our income streams, particularly through COVID. We'll have seen that reliance on the fare box was problematic. So hopefully, build to rent and other forms of property income allow us to diversify that income. In terms of progress to date, we set up the joint venture with Grainger back in 2019. As part of the original business plan, we had a target of 3,000 homes to deliver. Ultimately, the aim was to create a portfolio of professionally managed quality rental homes with 40% affordable. Over the course of 2 to 3 years following 2019, we successfully obtained planning consents on 5 schemes. Those schemes being 2 in Lambeth, 2 in Enfield, and 1 in Ealing. And those consents deliver, or will deliver, approximately 1,600 homes of that 3,000 target. Since obtaining planning consents, we went on to deliver detailed design and procurement activities for the first phase of works, and last March we commenced that first phase of works on 4 of the schemes. So 1,240 units in total across 4 sites. The key thing that we are facing now, as we heard this morning, is in relation to the regulatory environment that is under review, particularly in relation to fire safety and second staircases. As I think Mike said this morning, as a joint venture, we are desperate really to understand and to have clarity on what that means for us in terms of design. Once we have that clarity, we can take forward revisions to the consents and then move forward with those schemes to get to completions. In terms of delivery dates on those completions, it's very difficult to confirm dates. The nature of the design changes that are required will impact on the level of design that's required and the timescales associated with that. Clearly, some solutions would require a complete structural change to the building. Others are much more minimal changes. And then it will also affect the planning route that we take as well, and the timeframes associated with that planning route. So we're extremely keen to get motoring and to move forward, but we're not able to give completion dates at this stage.
Can I add a bit to that, which is that just to pick up on, we procured enabling works, and we've undertaken some enabling works on the site, and we've secured the sites. We were actually in a position where designs were complete and contractors were appointed, ready to go to the next stage, at which point we needed to halt. So we were ready to go, and now we have to go backwards in design terms, and then see what that means for the schemes and the town planning. So as Ben says, until we know what the shape of that looks like and how we can adapt those schemes, we're in a holding pattern. We don't know how long it will take us to get to the other end of the redesign to allow us to start on the site. The only thing we know at the moment is how long it's likely to take us to build them. We don't know the start date.
1 second, as the mayor himself also issued preference around second staircase. He also didn't issue any guidance, and he did that prior to. Was that prior to this design? So how did you move forward with this, or effectively the same constraint?
Drop it out. So yes, the mayor issued guidance saying that he also would like to see 2 staircases in buildings coming before him through the town planning process. So in a way that dealt with schemes yet to come before the GLA. Schemes that had already got consent were not picked up by that. So our schemes already had consent in that scenario. It's more it's the piecemeal fashion about how it's been dealt with. So this consultation for second staircases pretty much came out of the blue on the 23rd of December, a year and a bit ago, and started with a debate about 30 metres and second staircases, and then was it second staircase, second cause? And I think Michael Gove announced a wee while ago that actually it's now 18 metres, and a number of parties who'd locked a story off their buildings in order to get below 30 metres found they'd wasted a load of money on redesign. So it really is, it's less about, so you're absolutely right, because the mayor has said 2 staircases, no one knows what 2 staircases means, that's for sure. It hasn't impacted us because we already had our consents.
Okay, thank you.
Just to clarify, are all your buildings then more than 18 metres?
All of the sites have buildings within them that are more than 18 metres, so they are all impacted. Not all of the buildings are more than 18 metres.
Great. I think, Chair, my questions, because I was going to ask my next question, but basically Ben's already talked about market conditions, so I think I've finished my questions. Thank you, Chair.
Assemblymember Sheikh.
Yeah, thank you. So following on from the question around market conditions, so I imagine this has an impact on the answer, but I wanted to ask Ben if TfL had expected to expand its build-to-rent portfolio.
Yep, so as I said earlier, we have 1,600 homes that are currently in progress. We would obviously very much like to expand the portfolio and get up to the target that we originally set. We're doing that through a number of means. So we have, or we are currently in negotiations on a project in Ealing to forward fund another 195 homes. It's our wider Places for London scheme at Bollow Lane. And that sort of model of forward funding future schemes is something that we're very much interested in pursuing. TfL and Places for London also have a number of larger schemes, and we talked earlier about the benefit that build to rent can bring to delivering a sort of mixed use or mixed tenure opportunity on some of the larger schemes, where you'll have a component of build for sale, the affordable housing component, and potentially a build to rent component as well. So schemes like our Limo Peninsula scheme, schemes like North Greenwich, that will deliver homes at scale very much present opportunities to incorporate build-to-rent as part of those proposals.
Okay, fantastic. Well, that is exciting because I think it's really fantastic to see TfL building build-to-rent schemes. And on that point, in terms of the 40% build-to-rent units that will be affordable, is that a percentage that TfL is aiming to maintain or increase?
Places for London and TfL as a portfolio are aiming to deliver 50% across its portfolio on all of its sites. As a joint venture with Grainger, we set 40% affordable housing as a target from the outset, and we, as a result of our 50% target, maintaining that level of affordable is a key priority for us. So at this stage, we fully intend to maintain it.
That's great news. Thank you, Chair. I am continuing. Yep. How is? So Ben, back to you. How is TfL funding its affordable units, and what kind of tenures will the affordable units be?
So I think, as Mike touched on earlier, given that these schemes were consented as part of the previous affordable housing programme, we did benefit from the previous ability to grant fund discounted market rent homes, which ultimately is one of the ways that we've been able to deliver more affordable than some of the other build-to-rent schemes in the market. So it's a good example of where grant funding can assist in maximising the affordable housing component. The 4 schemes that are currently grant funded have secured £27 million worth of the affordable housing programme grant funding. So it's a key part of our financial model. Apologies, I've forgotten the second question. Could you?
No, that's quite fine. It was just a more clarity on the tenures that will be.
The tenures.
Yeah.
Tenures. So the London plan split of 70% discounted market rent and 30% at LLR levels is our sort of starting point as a joint venture, in order to enable us to benefit from the GLA fast track approach. As was mentioned earlier, we have had extended negotiations with local authorities in terms of the tenures that are needed at a local level, and as a result, in certain circumstances, we have renegotiated that level such that across the portfolio we're delivering. Just check my numbers. I think it's 47%. Just bear with me 1 second. Sorry, 57% of our affordable homes will be delivered at LLR levels or lower, rather than the 30% minimum requirement within the London plan. And within that category, if you like, a proportion of those are at LAR levels, and a proportion of them are, as agreed with Lambeth, at the Lambeth tenancy strategy levels.
Okay, this is good news for TfL back schemes. Yeah. Michael, you look like you wanted to come in.
I was just going to say that effectively the grant has been used to maintain the headline 40% by Harbour, but also to deliver lower rental levels, which is something I touched on before. That's where the grant can help. Sometimes if there isn't as much grant and someone wanted lower affordable housing, then you'd have to have less than 40%, for example. But the grant has allowed us to deliver that.
Okay, good news all round. Thank you. Chair, I think that's me done.
Okay, thank you. Assemblymember Cooper. I just wanted to ask about how the rent levels for the market units will be set and how they're going to be monitored over time to ensure that they're meeting needs in the area.
I touched upon it earlier on, which is that so they're market rents. So and we offer a mid-market product. We don't offer a premium build-to-rent product. So they're largely set by the market. But we always do research, and in fact our needs assessment for town planning, we look at average rent. What we really like to do is serve the local community. So we look at the average rents in that location and then cross-check it with our rent levels that we think the market are, to prove to ourselves that they are affordable to a cohort of local people. So I think that all I can say is we are a mid-market operator charging the market rent for mid-market, and that we want our buildings to be full.
Obviously, one of the things that has happened over time is that because rents have gone up so much, as well as mortgages, and it's become increasingly difficult to rent or buy in London, a number of key workers have moved out. And you can talk to teachers who've got the most astonishing journeys to work, firefighters, TfL staff, police, so on and so forth. Are key workers being sort of factored into the level of rents that you're setting? Is that something that you would want to ensure that local people who fulfil these critical roles, whether the ones I've mentioned, nurses, so on and so forth, have access to the products?
So in really simple terms, the affordable component is capped at £60,000 household income by the GLA and the local authority, and therefore that deals with those people that can earn up to 60,000 household income. Above that, and that's 40% by Harbour. So if key workers are caught within that, that's fine. It's often the case actually that the household income of key workers will be higher combined than 60, and they don't have the opportunity to access that type of housing. What I would say is that the key workers, I think it's 15 or 17% of build-to-rent tenants in London are key workers, but it's about affordability. So we'd love them to come. Does our product fit their need? If it's not in the intermediate part of it, then it will depend on what the rent levels are in the location at that particular time. But the idea of build-to-rent is it meets the needs of a wide community.
I mean, I don't know whether you can help a bit on this, Ben, and whether you've got any information about the number of TfL workers and transport staff who might be able to benefit either from the affordable or from the market, because clearly, whilst there might be some employees who get over the 60k threshold in their household income, some may not, or some may hover around it.
Yep. So I suppose as part of our planning applications and the housing assessments that were submitted with those applications, we did a significant amount of work with the local authorities, looking at the rent levels and demonstrating that key workers, nurses, teachers would be able to access the product. As Mike says, it is, I suppose, highly relevant where the scheme is and the rent levels within the location. And we do have a spread of sites across London, but certainly the outer London boroughs, places like Southall, for example, where we have a scheme, will have different affordability criteria than more central schemes. So it will be variable. In terms of specific figures in relation to TfL, it's not something we have to hand. But we'd be happy to investigate and provide more information on that if needed.
Given that there's been both general inflation, mainly due obviously to increases in food and energy, particularly for mobility, so petrol and diesel and stuff, and therefore there's been a round of fairly large increases in or larger than previously for the previous sort of 20 years probably, annual increases in pay. Do you think the 60k limit is still appropriate, or do you think it should be extended to, I don't know, 70, 75k for the household income?
I think it's twofold, really. One is what the threshold is, and then the other is that it grows, it's indexed. So absolutely, I would suggest that 60,000 has been stuck behind the times, and obviously wage inflation, I think last year was 8%. I'm not sure what it is actually for the median wage inflation, but certainly the average. So I would have thought people should be able to afford more. But again, it goes back to housing need and what people want to do. But obviously, if you hold back the affordable rents, it impacts the volume of affordable homes that we can deliver. So it's kind of, and by the way, the 60,000 is a max cap. It doesn't mean that you can't have a number of ranges of different wage thresholds in the DMR, and we've actually done that. I'd just like to make a point, if I may. So in Grainger's accounts, published accounts, you'll see that our rental inflation last year was 8% across the board, and coincidentally, wage inflation was about the same. And that again is in the mid-market, so it's not in the lower median element. So I think if the wages are rising by 8% and the rents are rising by 8%, I think naturally the affordability remains. And as I said earlier on, our average affordability versus wages is about 28% of their gross income, 29% of the gross income, which is eminently affordable. The other thing to point out is affordability is very, very different as you earn more money. And I did some work back when we were looking at London living rents. You know, if you earn £60,000, if one person earns that £60,000 in a household, they pay more tax. If two earn 30, they have more disposable income. As soon as you get further up the tree and they start to earn 80,000, 90,000, it transforms their disposable income. And I think using broad brush affordability statistics related to the social sector doesn't hold true for the private sector. And if people can't afford it, they tend not to buy it.
Yes, I completely take your point about two people on, 32,000 or even 38,000 or 40,000 will be paying less tax than one person on 64, 65,000. I don't really want to go off into the realms of fiscal drag and the changes to the tax system that we've, or the lack of changes to the tax system that we've seen in recent times. But I think the point about the gradual increase of a figure like the 60k, I think is what you're saying, rather than tying it to more recent changes. It's just something that you would rather see sort of naturally increasing on a regular basis.
We'd like it to follow market rents to a large extent, and market rents tend to follow inflation and wage inflation, and to leave it
to follow the market.
So follow the market, so the discount remains,
yeah.
But it doesn't keep. What we're in danger of is the discount keeps getting greater and greater and greater. So those people that have access to housing have won the lottery. They're effectively progressively getting a bigger and bigger and bigger discount for the market. Yes. Personally, my view is that it should follow the market. It makes it easier. And of course, it's all about making my job easier. It makes it easier to financially model it if we know what's happening with the private and in our assumptions and the affordable. If it's artificially capped and not growing, we then have to work out what is it going to do then, and that makes it more difficult.
Okay, thank you. On a different note, I just wondered what TfL and Grainger have been doing to deliver higher standards and design quality in the build-to-rent sector, and how these, I mean, we talked a bit about not wanting to hand something over at the end of its life that's in a state of advanced disrepair and mouldy and damp and all the rest of it, but in terms of higher design standards and design quality, and what else are you looking at in terms of keeping good quality for the full length of life of the product?
So if I can start and then hand over to Ben. So I think it's a really important thing to understand about build-to-rent, that build-to-rent is not the building itself. It is a building and apartments that frankly are, if you walk into one of our apartments, you will just see a very simple living space, white walls, resilient floors, good kitchen, and white goods. The money isn't spent on bells and whistles. It is good quality, well-designed apartments. Then you've got an amenity space, gym, co-working space, maybe a dining room, etc., which is where we forge the community. And again, that's a fitted-out element. And often most of our apartments are let furnished, actually, because that's what the market wants, interestingly. The critical thing between build-to-rent and a private rented sector is that then we have people in the buildings, and then you're getting a professional service, and there is an intent and a desire to create community by mixing people and having people on the front desk and initiatives and charity events and quizzes, etc., etc., etc. It is that makes build to rent, not the building. So I think there's two aspects. We can talk about the building design, but there's also the design of the service and the service standards. I can't emphasise that more really. That's what build to rent is, not a building. In terms of building quality, I'll let Ben talk about the sustainability, design, framework, etc.
Yep, and I suppose going to Mike's point, this is probably not bespoke to build to rent. This is something that Places for London ascribe to all of our projects, be it private for sale or build to rent, or commercial offices for that matter. But ultimately, what we're absolutely committed to is creating a legacy through design. So all of Places for London schemes adhere to our design principles. So we have 6. It's a document that's readily available. 6 key design principles that our architectural teams have to deliver against. All of our schemes have to go through independent design quality review, be it through the local authority in terms of their panels, or through the mayoral design advocates. And we have seen real benefit from that, I would say. It means that the design process takes longer, and it means that quite often you have to go back to the drawing board, literally. But we have seen schemes change for the better as a result of that process. Good example is Southall, where originally we had 6 buildings within the scheme, and through the mayoral design process, it was agreed that we would reduce that to 5 buildings in order to improve daylight sunlight and improve public realm and the courtyards within the buildings. So that's a process that we very much go through. We've also instigated what we call our 10 key design themes. So once you've got planning consent, quite often what you see is through the detailed design process and through the procurement process, the designs change, and not always for the better. And what we're keen to do is to make sure that we look at what are the fundamental principal design components of the scheme that we would want retained through delivery.
Could you share those with us? Do you think you could send? Thanks, that would be great. I think it'd be handy to see what you feel are the sort of 10 key.
Yeah, and it varies by scheme. So the architects will come up with a scheme, and then there'll be certain aspects of that scheme that we see a key to be retained through delivery. So we find that useful. And then I suppose the final part is around our sustainable development framework, which we spent the best part of 2 years developing. It is very robust and detailed, and incorporates, I think, 98 KPIs, where our design teams essentially have to run through those KPIs and assess how they're delivering against each of them. We have a series of best practice and leading practice KPIs. I suppose just to give an example, none of our schemes will be delivering any fossil fuel component to the energy systems. They'll be meeting the new 10% biodiversity requirements, and in most cases we're going well above that.
So they're fully London Plan compliant in all aspects around everything from the sort of sustainability of the heating systems through to being biodiversity net gain and urban greening factor compliant and all of those areas. That sounds really good. I'm slightly conscious that we are I think you've done a great double act actually, talking about the sustainability of the management and then also of the buildings, but I'm slightly conscious that we have been running quite slowly, so I'm just going to say thank you for all of that, and perhaps if you could send us those sort of 10 key design. I'm not sure, do we want the 98 KPIs as well? Maybe that, I don't know if you can share those. Thank you, Chair. I'm going to leave it there.
Thank you very much, Assemblyman Cooper. Can I just bring in Assemblyman Roman?
Yes, thank you. So my question is to Ben, but I don't know whether you may have a view, Michael, but it's specifically around TfL and Places for London, actually. So you've talked about how within this particular JV and the partnership working with Grainger, there's an agreement around 40% affordable tenancies there, which is really welcome. Obviously, you need to have both offers, the affordable and the well-managed private, to make this a going concern. But I wonder, this is more about how you set the policy and how you've designed that policy and how it's applied in affordable homes and rents, and how that applies across the piece at places for London. How you've managed to do that when other parts of TfL seem to struggle with setting the principles of an affordable rent, which to my mind is quite well understood. To be able to have a private and a, if you like, public offering, tenure blind, in the same development or in the same space.
So I suppose in terms of the overall strategy, we have a portfolio approach which is at 50% affordable. What that means is that across our portfolio we have to ensure that where we're delivering less than 50%, we are providing that elsewhere. So some of our schemes will come forward at 100% affordable, for example, in order that we can deliver across the piece. With Build to Rent in particular, we have set up our own registered provider as part of the joint venture. As Mike says, that's principally in order that we can access the grant that we spoke about previously, because ultimately the intention is that those affordable homes are delivered as part of the same management platform, completely tenure blind, complete access to the same amenities and services and facilities. So that works within a build to rent setting where you effectively have one operator like Grainger who are delivering both the affordable and the private. On our other schemes, we will have much more of a traditional approach whereby the affordable component is delivered by an RP under a Section 106 traditional agreement. So it works slightly differently in that you're effectively creating a separate demise and a separate ownership structure in relation to those affordable units, which means that whilst the schemes are designed to exactly the same standards, there is a different management approach to the two tenures.
Can I add something to that for you, because it's one of my pet subjects? So what we do with our DMR, which is obviously a lower rent, it costs us the same to manage a DMR home and to offer the same services, because we don't charge for services. They are free in the rent, or rather they're paid at the point of purchase, free at the point of purchase. We model the gross to net leakage, which is our operating costs, against the rent. So where we've got an RP, which we do on our schemes, the price paid by the RP within that group reflects the net income they'll actually receive. So actually the net income they'll receive is a lot less than they would have received if they had non-tenure blind service charge contribution of capped at say 4%. Back in the day, all RPs wanted to maximise their ability to acquire, and therefore they pay the highest price. And in order to do that, they need to minimise the operational cost. And so they wouldn't want shared services, so they wouldn't want the amenity space, they wouldn't want the concierge. So what we're able to do, there's no reason why they couldn't do those things, they would just have to factor into their financial modelling. So what we're able to do is, no, we embrace that, and the price we pay for the land and the price the assumptions we have for operation factor in the fact that that is a tenure blind building where everyone gets the same. But we could say, well, the affordable homes are not tenure blind and they don't get all of these things, and somehow create a slightly more greater income stream, but that's just against everything that Build to Rent stands for.
Thank you very much, Assembly Member. Now we come to our final question, slight change of tack here. What role does modular construction have in developing the build-to-rent homes faster and more efficiently? Is it something that you've used in the past, you're looking to use it in the future, and if so, when, where and how?
Another of my pet subjects. And we worked, so when we, there is a difference between modular homes and modern methods of construction. So when we talk about modular, we're tending to talk about volumetric modular, where you see cranes lifting big units onto buildings. And Rebecca earlier mentioned that Long Harbour have a scheme like that, and we know that Greystar do it. Modular is not necessarily faster, because you have to spend an awful lot of time earlier on in the design to get it right. But it is faster on site. But what we found is that modular falls at the first hurdle of optimising site design. So when we started on this adventure, we actually briefed that the scheme should come forward as if they could be delivered volumetric modular. So they would be regular and repeatable patterns. And we quickly found that the site context and optimising the number of homes and the mix of units and the demises of affordable just blew it apart. I'll give you a perfect example on a scheme whereby we were asked by the local authority and I think the MDA to move a building over. And because we had to move the building over to create more daylight, sunlight, public realm, it meant another building had to change shape. So it got slightly thinner and longer. And that's an absolute disaster for volumetric modular construction, which requires really a module of 2.4, I think it is. So volumetric modular, I don't think works as a panacea in urban locations where design is really important. You know, where you're trying to create a design that's sympathetic to the locale in heritage locations. It can work brilliantly, say, in the docks where buildings tend to be rectangular, but in where you're trying to produce really useful urban design, townscape, it tends to fail at the first hurdle. So what we then do is we move further down the chain. There's 7 categories. And so we'll use bathroom pods, prefabricated facades, precast concrete, etc., etc. So that's where we are. And what we tend to do is work with the contractor we've appointed to find the best way of building it. So we'll have a mix of MMC opportunities across the schemes, and it's not all standardised. And again, it's not all standardised because every single block in the scheme is different to every other block, and every site is different to every other site. That's just development in tight urban sites.
I see, because often people talk about it as if it's Lego, but of course you have to fit in to whatever is already there.
Yeah.
And that drives traditional construction techniques are very pliable in that sense.
They are very pliable and in modular in a different way, exactly right. So orientation of a site, shape of a site, the local context, how important the aesthetic is, all of those things impact whether volumetric modular suits as a solution, and in our experience to date it hasn't. That's just because of the nature of the site. So I'm not against it at all, but it works. You know, it works in certain locations, and we know it. You know, Croydon has got the tallest modular built-to-rent building built by Greystar, but it is long and rectangular.
And it basically fit the site is probably their start point if it fits in that site and it doesn't have other buildings that it's butted up against and roads, etc., etc. Yes. Okay, that's very interesting because most people haven't made that strong point. We've talked about modular a lot over the years, haven't made the point that it's great, but it is definitely site-specific.
Yes, and it's not necessarily going to optimise what you can get out of a site. And if there's one thing that we have to do in London is optimise the sites to get the most amount of homes that we can while maintaining design quality.
Definitely. Ben, do you...
Yeah, can I just maybe add a couple of things? So I think the other constraint that we just need to be aware of is that there's only so many people out there in the market providing the volumetric modular option. So it becomes quite a risk for a developer contracting that sort of product in terms of actually being able to deliver the units. We've seen quite a lot of insolvency in the sector in that particular volumetric modular market, for example. But I think what we wouldn't want the committee to kind of go away thinking is that we're against modern methods of construction, because as a principle, we're incredibly supportive, and the joint venture was set out at the outset to really embrace modern methods of construction where appropriate. The environmental benefits that it can drive are significant in terms of the site construction impacts, particularly around noise, particularly around air quality, waste. But that, in our view, can be you can get those benefits through some of the other categories of modern methods of construction. So the prefabricated components that Mike talked about. Those are real benefits that the industry is starting to see, and it's becoming, I suppose, a more mainstream element of contractors' armoury. That where we can use it and where it makes sense to do so, we will do so. I suppose pricing is one issue at the moment where until those components and products become, financially competitive alongside traditional methods, there will always be a difficulty in terms of employing them. But we're very keen to do so.
So you're essentially saying you're not against them, and it's not just volumetric modern techniques; it's all modern techniques you're looking to apply. And ultimately, it does come down to build cost. If someone is available and can do it cheaply and properly, you would probably consider it. I mean, that makes sense. I suppose it makes perfect sense.
I suppose the other category we haven't talked about is also methods on site. So installation techniques, techniques that improve health and safety. Those are all modern methods of construction that we shouldn't forget about, and it's something that we're very keen to ensure that our contractors are delivering against.
Okay, thank you. I think unless hello. Oh, there we go. We're back. It brings me to the end of this morning's discussion. Firstly, just to thank our panel. This has been a very, very interesting conversation for us. As I said, the committee is quite old in GLA terms and discussed many things many times. A lot of this felt like new and very useful information, and we will return to that. We will take you up most probably on your kind invitation for a site visit. We all like to come and see what's actually going on rather than just sit in this committee room, so that we'll follow up on that at a later date. Again, Ben, thank you very much. Michael, thank you very much. I have some formal business I need to attend to for the committee, but I release you to the wild. You are welcome to stay if you'd like, but I'm sure you have a busy life to get back to and job. Where am I? Can we note the report and today's discussion?
Noted.
Can we delegate authority to me as chairman in consultation with party group lead members to agree the output arising from this discussion?
Agreed.
Can we note our work programme for 23-24 Assembly year?
Noted.
The date of the next meeting of the committee is the 21st of February 2024 at 2 p.m. in the City Hall chamber. I have no urgent business. I declare this meeting closed.
This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by.